N- No, and that's why Cathie Wood has reached cult-like status in recent months, Scott. Her big conviction bets in those high-octane areas like Tesla and Bitcoin were seen as bold and fruitful. Well, at least up until recently. Wood's flagship Ark Innovation ETF soared 150% last year. But it's down roughly 30% since its highs last month. But Wood, undeterred, said on CNBC earlier that the sell-off has made her even more bullish. Now, it's that kind of chutzpah that earned her the nickname Mama Cathie on the Reddit boards. The retail crowd has largely applauded her bullishness on Tesla and her openness, publishing research and valuation models as opposed to, the old school Wall Street firms that reserve that research for their proprietary clients. Now, the 65-year-old daughter of Irish immigrants grew up in California and began working in traditional asset managers like Capital Group and Jennison Associates. She jumped around to a few other shops before ultimately launching Ark, which is reportedly named Active Research Knowledge. That's what it stands for in 2014. Barron's also reported that Wood, who's a devout Catholic, named the firm in a nod to the Ark of the Covenant, which is said to have held the 10 Commandments. Now, perhaps a more timely analogy is Noah's Ark, with a flood of assets bursting into the Ark funds throughout the pandemic, and then the tide moving out again with the recent market sell-off. Scott.
What do you think, Leslie, about the idea that how much of this is just a matter of timing and good timing and making the right bets at the right time?
She invests in a very specific type of stocks. She invests in a lot of companies that don't have profits. They're more kind of the smaller mid-cap stocks, obviously Tesla being the exception, although she's largely kind of ridden it up to being a large cap stock. And so oftentimes you do see those names really do well in areas that, you have bull markets, you have a lot of momentum to the upside. Investors get really excited about those, and that's been able to help her deliver some alpha. But we've got a backdrop now where interest rates are rising. People are starting to get a little bit more conservative. Things like profits and fundamentals coming a little bit more into the forefront of investors' minds. And so stocks that she's invested in, regardless of her conviction, they do tend to, underperform in those types of environments.
All right, Leslie, we appreciate it. That's Leslie Picker on The Edge with us tonight. We turn back to our panel now. Bill Cohen, Michelle Romanow, and TRUNG FAN still with us tonight. All right, Bill, you tell me. Is she the face of the new market, or is she a face of a new bubble?
Well, I think, Leslie was very thorough in her report, but also pretty generous. Look, there's no taking away from Cathie Wood that she had a great 2020. A lot of people had a great 2020. I've had a great run since 2009, since March of 2009, when the Dow was at 6,500 and now it's 31,000. And I didn't do a damn thing, Scott. What I think is that, Cathie Wood is unfortunately probably yesterday's news already. She had a terrible February. You had her on your show on February 17th. She was talking about Teladoc, Scott. You may remember this. It was at $270 a share as you were talking to her. Now it's $170. That's 3 weeks ago. It's down $100 a share. I love her conviction. I love her passion. But, we're not going to be talking about Cathie Wood much more.
Michelle, she is the first, though, to say that her time horizon is 5 years. She's looking out longer than most.
I think it's all about time horizon. I mean, you compare her to the next Buffett. I mean, do you really want to bet on the Krafts and the Coca-Colas and Amex long term? Or do you want to bet in basically the next generation, the Teslas and the Squares and Zillows? I actually think that, there's going to be a lot of turbulence as these stocks probably go up. And for sure, if we pick short horizons, I'm sure you're right. She had a bad February. I just think long term, she's very bullish on where the future is going, and has probably picked a set of stocks that I think are going to perform much better than the legacy ones.
I'm 100%.
She is a rock star right now. There is no doubt about that. Quickly.
I totally agree with Michelle here. I just think you can't look at the February performance. I mean, she was calling Tesla as a $1.4 trillion company in 2019. Everybody laughed her out the door. And when Tesla got up to about 800 billion, 900 billion, it looked pretty vindicated. But still, it's choppy. It's going to be volatile. The price targets are still, to some people, frankly, insane. But I mean, I'm invested in some of her ETFs. I like the ETF. And I think what she does very good is that she doesn't just hire a bunch of MBAs. She hires industry domain experts and teaches them how to become investors. I think that will give her an edge in the long run, and particularly in the biotech space, because if you want a growth area for the next 20, 30 years, that will be the quote unquote next internet, it's probably gonna be biotech. And she's got people in that space, the experts, picking names there. And that's gonna be extremely volatile, buyer beware, but I'm a big fan of what she's doing.